All right. Good morning, good afternoon, greetings from wherever you are around the world. Um, Hi again. I know it's been a while. I haven't really done these videos in so long. I haven't even done a weekly outlook video in so long, but trust me when I say I'm active on the chart. I'm consistently learning something new. I'm always improving on my trading every day, every week, every hour. It doesn't mean I'm trading literally every day, but I'm always on the charts every day, just so I can improve more and more. Yeah, just because I'm not too active on the YouTube channel doesn't mean I'm not. Like right now, I know I haven't really posted in a very long time. For example, I mean, the last time I posted was literally a whole month ago. So yeah, and even before then, it's literally been like a whole month apart from each other. So yeah, I can admit that in the last 1 year, having seen only 8 videos on my channel doesn't really make sense, especially considering how active I usually am. I mean, 260 videos in basically what, 2 years. Oh, I'm surprised we're actually already almost at 600 subscribers, so let's get that going. Let's get this number up. It sounds crazy, but maybe we can push for 1000 subscribers by the end of June. That would be insane. That would really be insane. But yeah, honestly, I'm not really too fixated on these numbers. I'm just here to share my opinion, share what I think on the charts by either teaching something new, something different, something interesting, helping total beginners to understand the markets as a whole, or improving myself as a trader, right? So I'm not really too this channel was mostly for the sake of documenting my journey in trading, but I thought in the process I could also teach some stuff here and there. I mean, and that's what I've done. That's why I've also divided them in different playlists as well and things like that, right? So I'm gonna try and be more active. I'm not sure how far I'm going to go with this, but I'm going to do my best and try to be more consistent on the charts. Anyway, let's go back to the dollar index as we were mentioning just now. Okay, so starting off with the high time frame, I'm gonna start off with the 3-month chart, which is the quarterly chart, and I'm going to mention the reason why I'm starting there. Well, firstly, it's because if you looked at the past couple candles, right, keep in mind that one singular candle signifies 3 months of price action, right? So if right now we are about to close this current candle, I mean, we're only 23 days to go in order to close this quarter. It shows that in the last 4 quarters, we've basically gone nowhere. Yes, on Friday, as we closed, we were getting some nice price action. We're getting some energy. We're getting some liquidity injected in the markets and stuff. But honestly, looking at everything holistically speaking, right, I don't really see much happening on the dollar. When you go down to the monthly time frame, you get to see the chop even more. We've literally just been in a sideways price action. So yes, even though again, as I said on Friday, we've actually pumped a little bit, it's nothing to be excited about, because I mean, we did also pump here in this current month, right? In this previous month, we also fell off in these series of candles here, series of months, right? So my point is, we've actually just been sideways the whole time, and it's nothing to really be too excited about, in my opinion, right? We haven't really gone anywhere or done anything too crazy. So right now, what am I looking for? Personally, going back to the higher time frame, the 3 months chart, as we started the year, I was looking to see if we could trade into this fair value gap, right? The quarterly fair value gap, which we did at the beginning of the year. But this was not convincing enough. This little taps here that we're getting was not too convincing. So I was looking for a deeper push into the 3 months fair value gap. Then we can look for a continuation downwards, something like so. Maybe even to the external liquidity that I've marked out from 2 years ago. I marked this out 2 years ago. I know it's the low from 2018, but it wasn't. Yeah, I marked it out 2 years ago. So let's see. I'm not sure how the market is gonna play out. Of course, I'm not really a position trader, but these high time frame ideas helps to dictate what direction we are most likely going to go on lower time frames, right? So Talking about lower time frames, going down to the monthly time frame, we do have a premium gap right there that's also within the quarterly fair value gap right up there. So we could see, I'm not saying that we will get it for sure, but we could see price trade up into that monthly fair value gap before continuing down like so, right? So that could be our drawn liquidity. The reason I say it could is because many times now I've seen price trade up into a premium and then gets immediately rejected. Say for example here, we took liquidity, right? We took the lows right there and rallied to the upside. But look how we rallied. You would think that there would be a follow through for us to continue, right? And then finally drop later. But that was never the case. We just supported an area of resistance. And I say this is an area of resistance because we've touched it now more than 3 times. It was 1, 2, 3, 4, 5, 6. So this is a strong area of resistance. In my opinion, right? Only if we return to this area of resistance. Let me just delete. Let me actually delete both of them. I'm gonna delete the higher time frame fair value gap so we can see what I'm talking about a little bit better. And I'm also gonna remove this line. But if we return to this area of resistance yet again, then more likely than not, we're going to run to the first swing high, which in this case is the 101.977. But if you are paying attention, you would realize that's not actually the first swing high above resistance. It's actually here, which is 101.259, right? So we can find a median between those two levels and maybe call it, let me actually draw it out so it's easier for us to see what I mean by median between the 2 points. We can round it up. We can round it up or round it down to a psychological level like 101.5. So 101.5 and just have it there on our charts. So we can have that as the 2 areas that we can target. Then of course, if we get really excited, we can find ourselves going to that buy side liquidity all the way over there. I'm not really favoring that high. It's way too high in my opinion. And us sweeping that high would mean going into a very deep premium of the range, because if we measure this range right from the high all the way to the low there, I'm just gonna change this to the 50-50 template. You would see that us trading up into this premium, right, is basically getting too close to that 50%. You know, many people prefer to sell in the premium area, and I was one of those people, right, until I of course started learning advanced liquidity concepts from Menda. So many people would be looking for sells from up here. Many would even be looking for OTE, so maybe a premium fair value gap like this one, right, to sell from. Personally, if we are bearish on the higher time frame, then I wouldn't like us to trade too deeply into the gap. That's why I'm taking the lowest hanging fruit possible. That's why I'm not even targeting the highs all the way there. I'm just gonna follow the simple advanced liquidity concepts and not worry myself much about that high. I wouldn't even worry myself much about the 101.5 level. I would just mostly focus on the first swing high above an area of resistance, right? We can all agree that this purple area that I've highlighted is a very strong area of resistance. So in my opinion, if and only if we return to this area one more time, and especially if we consolidate around this area, personally, I would be looking for a quick rally up. This could be a quick trade for me to take. We do not have to return down to discount anymore. We can find a trade setup that looks something like that, taking it to the high, right? The reason I say we don't have to return is because if we're bouncing yet again for the 7th time in this area of resistance and we're going to retrace down to a deep discount to give many people opportunities to buy, for me, I would consider that as not the high probability trade setup, because I would say that the market makers, the people with money, are not actually in that trade, right? So I'm going to wait for Tuesday, right? The reason I'm saying Tuesday is because I'm gonna wait to see if we create a daily fair value gap here. Just imagine something like so. So for us to see a daily fair value gap create, we would have to wait for Monday to consolidate, right? To basically play around and do essentially nothing, so that on Tuesday we can trade down into the daily fair value gap, And at that point is when I'll be looking for buys to take it up to the buy side liquidity. Of course, as always, look for lower time frame confirmations. For example, the daily would mean looking for a 1 hourly or an hourly chart confirmation. Whatever your entry model is what you take. Then my target going into the week is 101.259 on the dollar index. Beyond that, I'm not too sure for the reasons that I mentioned earlier, mostly being that we are technically still stuck in a range, so I can't really confidently say that we are going to do A, B, C, D, E. I can only best predict based on what the market is giving me, right? So yeah, overall, I'm still gonna wait for more information. I'm not having anything certain yet. Maybe I might release an intra-week update if I have something a little bit more cleaner. But right now, I don't really have anything too clean. So moving on to the actual foreign currencies, Forex, right? Now that we've covered the dollar, I think we'll start off with euro. All right, so basically, euro will be mimicking the exact opposite. I don't think I would need to cover everything from the high time frame perspective, like the 3 months perspective, but it's basically the same idea. I'm still bullish very long term, as you can see from my arrow right there, but I was looking to see if we could trade back down into this quarterly fair value gap before we can continue higher, similar to the dollar analysis, right? And yeah, the quarterly fair value gap is basically this lower yellow line, and when we go down to the weekly time frame, you can see it's this yellow line right there, right? But I do have nearer shorter term targets, like for example these equal lows right here. I covered this fair value gap a few days ago, weeks, I think about a week and a few days actually ago, as my area of interest to start selling off euro dollar. I shared it on my personal group with a couple of people that I actually trade with, and yeah, I never paid much attention to it to try and take it as a trade. I was more focused on gold and the indices, right? So I didn't really capitalize on this move. I capitalized on the move to the upside into the gap, but didn't pay attention enough to see that we could sell off, because as we tapped into this daily fair value gap right there, I should have gone down to the hourly time frame, which is right there, right? As we tapped into it, this was our first displacement, but it wasn't really convincing enough. But one thing it did do was it negated this fair value gap, right? This bullish fair value gap right there, we closed below it right here in this very candle. So that then makes it an inverted fair value gap, right? That's what many people would call an IFVG, that basically, but I don't really trade with that format anymore. But yeah, so if you didn't trust this inversion fair value gap, you would have at least waited for a second displacement, which is what we got right here. And this is where I should have been entering, right? This was my indicator. Yes, it might not look like the best risk reward ratio, because it'll look something like this. Maybe potentially putting the stop loss there for a safer one, but I would have put it here because I think this is safe enough. But then it would seem like it's not much that you're gaining from what you're risking, right? But the truth is, remember, the target is all the way down here at the relative equal lows that I highlighted from the higher time frame, these two lows that we have right there, right? So technically this would have been a very nice trade that would have made me move my stop loss to break even by now. But yeah, as I said, shoulda, coulda, woulda, didn't really capitalize on it, and I'm not really sour about it because there are many more opportunities to come. And yeah, it's just interesting, really nice to see it play out. And as I've mentioned already on dollar, I would wait for, if I wanted to capitalize on this, if I wanted to still trade it, I would wait for Tuesday, so we can potentially form a fair value gap here that we could retrace into, right? And then look for sells to 1.14430, which is my short-term drawn liquidity. Then longer term is this which is 1.14 level. It's a psychological level, which I like, and we can see how we react from there going into the coming months. But for this week ahead, I'm looking for these lows on EU. The same goes for GU, but GU is a little bit stronger. So I've been conflicted on this actually for a while, but I mean, looking at the weekly time frame, we can basically see we got a very easy internal to external liquidity run. Let me just make this red so we can see. We tapped into the fair value gap here on the weekly, and we could potentially see us coming out of it. Then of course, as I said, we target the external range liquidity. It's a very simple thing. And I know you see this giant arrow, wondering where it's from or where it's going. Well, basically the same idea. Higher time frame, we are still reacting from a quarterly fair value gap right there. We perfectly bounced on it and even took out the external range liquidity, but we could then later see these relative equal highs getting swept, possibly the external range liquidity high there. So yeah, high time frame, I am still bullish. As we can see, this is a bullish structure on the quarterly time frame, but that's, yeah, okay. It's literally written there, but that was just an analysis I was doing some time ago. So yeah, on the quarterly time frame, we could still see these highs getting taken, but because it's a quarterly chart, this could happen months later, not now, right? So something to keep an eye out on, but not something to be too glued on, not something to really take to heart, especially as a day trader, right? So short term, as I've mentioned, we are reacting from nice quarterly fair value gaps, nice monthly fair value gaps. So it's really hard for me to try and be selling GU compared to EU, even though right now we are reacting from a bearish weekly fair value gap, right? It's not my favorite to be looking for sells right now, because as I just showed you, everything is pointing towards higher prices. From the quarterly time frame to the lower time frames, everything is telling me just look for buys on this, but of course not just blindly buy, but rather wait for confirmation. This was what I was looking for. I don't know how this is not on my thingy. Interesting. So it just glitched out. Yeah, everything on the high time frame is saying buy. Weekly is technically a high time frame, but it's a lower time frame compared to the other ones that I just mentioned. So personally, I would not be trying to sell this, not yet. Maybe we can take this external range low, right? Maybe, just maybe we can, but I would rather look for buys after we take the lows, right? I would rather look for positions. I would rather wait for a break of structure back to the upside to start buying this all the way to that point there, right? But right now, would you convince me to sell this? Probably not, but I can sell EU, yes. Aussie probably, right? But again, Aussie has a nice double top situation going on here, so I'd also wait for Aussie to rather pull back into a high time frame area for me to start buying from. Looking at this weekly time frame, this does not look bearish to me. This just looks like a minor pullback for us to run higher. So if we do flip bullish on a lower time frame, say for example the hourly chart or the 4-hourly chart, we start having some nice bullish structure form, something like so, right? Fair value gap 1, fair value gap 2, like we're literally showing respect constantly of fair value gaps, something like this, 1 and 2, right? Then I could see myself positioning for buys all the way to the relative equal highs situation there. But other than that, not really looking for anything else on the dollar majors. I have nothing too clear on Kiwi, on NZD USD. We are very weak, but we've cleared most liquidity targets that I would have targeted. So right now I'm neutral on it. My favorite to pay attention to is Aussie for buys and Euro for sells. And yeah, that's it for the dollar. One interesting thing before we move on, I wanted to move on to USD JPY, because of course if we're looking for higher dollar, we're looking for higher UJ, right? But one thing that I see interesting happening right now is that there's a high chance that yen, not necessarily UJ, right? But yen as a pair might actually fall off at some point. This this idea has nothing to do with any logical setups. It has nothing to do with anything that I see on the chart. This is purely speculation. This is purely intuition, if you want to call it that. It has nothing to do with what I'm seeing on the chart. So just keep that in mind before you take this as fact. So I'm looking for possible areas of a massive manipulation to clear up all these lows. Say, for example, this rejection block, or the entire order block, this purple candle. When you look at NZD JPY, we already falling off. When you look at GJ, we are also rejecting off, right? Also from the order block, like I mentioned, the last candle, the last bullish candle before we fell off, right there. When you look at Euro JPY, we're having a similar situation, just not as weak as GJ is, right? Because we never returned to it. So this makes me think that we might have a major liquidity sweep on the yen pairs, right? Of course, this is counter trade. This is why I'm saying that it's all intuition, because when you zoom out on any of the yen pairs, you see that we're massively bullish. This is a bullish trend. Why would you be looking for something that's negating the trend? Look at AJ. AJ was an easy buy for me back in 2022. Every time I wanted to pass a challenge and I could swing, I would literally just go to AJ and just keep buying it, wait for a manipulation and then keep buying it every day. This is a daily time frame, so you could see how easy it was for me to find buy setups on AJ. So yeah, like, why would you then be looking to counter the trend and be selling off? That's the thing that I can't say. That's the thing I can't tell you why. But intuitively, I'm looking for a quick drop off. Even on UJ, for example, we could reject from there, drop off into a nice discount. Like, you see this lovely bearish white candle right here. We could get something like that quickly into an order block. Then I would rather use the order block / rejection block area to buy, right? So I'd rather take a setup that looks something like this. Stop loss there, and then take that to the high for a nice 7-hour position, right? Of course, what's my backing for this? I have no backing for it. I have no reason for it. It's just intuition. I feel like I have to keep mentioning that many times. And then for AJ, if we are going to get a quick liquidity sweep or wipe, we could look for the first fair value gap. This is literally the all-time high, by the way. There's nothing else waiting for us there. So we could see a pullback down into this monthly fair value gap. I know it's very steep. It's literally wiping what we've done throughout the whole month, the whole year, because January 1st is right there. The opening price for the year is right here. So it wouldn't make sense to anyone else, but to me, I'm looking for a possible fall off into this area. Then we could reject from it. Or we could just get a quick minor liquidity sweep, like maybe a sweep of this low right here, maybe trade down into this weekly candle or something. All right, we could trade down into it, then find ourselves rotating back higher. But yeah, for some reason I'm expecting a crazy sweep on the yen pairs. Let's just see how that works out this week. And to avoid making this video even longer, let's quickly go to the indices. I'm going to start off with YM today instead of the usual Nasdaq or S&P 500. As we can see, we're at literally the all-time high. We've just been having a bullish rally the whole time, but I'm going, because of that, because we have no other price reference on the past on the left side of the screen, I'm going to start off here with the 4-hourly time frame on YM. We are currently trading in an NWOG. I think this NWOG was from 2 or 3 weeks ago. I'm not sure. The 22nd of May. That's where this new week opening gap formed, right? This is an interesting one for me because it became subconsciously an area of support, right? I mean, look how many times we resisted this area right here. We broke through it, came down, almost touched it, and then we touched it here one more time, then bounced from it, and now we're currently on it. right? So if we can get another bounce from this area, right? If we can get another bounce from this area, for me, that would be considered a high probability area of support slash resistance, right? So in this case, we can call it a support level, something like so, right? Because we would have bounced it 3 times roughly. I say 3 times because I don't know how to consider this 1, but this is 2 and this is 3, right? So if we can get a bounce off of this area, I'll consider it to be resistance, but that would be, to me, an induction for us to sell off to the first swing low below support, right? And the first swing low is this obvious swing low that we have right here. So it's going to be a nice liquidity sweep, probably into a 4-hourly fair value gap, you know, something like that, some sort of PDRA that we can find or something like so, right? And then I'm going to be looking to counter trend that those that are buying it back up, because people are probably looking at this as a nice area of support to buy it back up to the all-time high. I'm going to look for a quick sweep of these lows, even though this idea is counter trend trading, because as I mentioned at the beginning, we've just been bullish the whole time, but I'm looking for a nice sweep of liquidity, right? We've just been bullish and rallying, but I'm looking for nice retracements before we can continue higher. Of course, if we continue lower, we have obvious areas of target. I mean, look at this whole consolidation that we have here. So if we can find ourselves trading inside this area here, which is another SNR area, right? Something like this. If we can find ourselves trading back down to this area and then spending time there as well, maybe bounce off again, creating a nice area of support slash resistance this time, right? I can look for us to go lower again, right? Because of course people will be looking at this area as an interesting area, because in the past it was a resistant area. So yeah, maybe they'll consider it to be support. So I'm just gonna call it S/R, support or resistant, because it will be an area of support in the future, whilst in the past it was an area of resistance. So yeah, if we get a reaction from it again, I might look for another liquidity sweep of some sort, something like this. Then I might look to sell YM even more. Of course, as the principle goes, you target the first low below the area of SNR, which in this case is right here. It's not really the external low, but this is external low if we get really excited, right? But this would be the first target. So again, these concepts are coming from Menda's Liquidity Concepts. If you guys are interested in me breaking his concepts down a little bit more, just let me know. In the week, I can break it down from my own understanding and maybe show some examples from the charts. Yeah, just let me know in general. I don't want to expand too much on something that doesn't really have interest, right? If you guys are not interested, then there's no need for me to share more on it. But this is basically what I have as in mind going into Monday/Tuesday. I'm looking for a run down to 50,386 level on YM. And if we get too excited later in the week, we could look for lower, below 49k basically, right? But yeah, that's my view on YM. Similar goes to ES. We fell off hard on on Friday, sorry. We fell off really hard on Friday towards the close. We continued even more, right? So we could find ourselves clearing this external low, which is high time frame, which is within the high time frame fair value gaps. In this case, it's a weekly. If we get excited, we could find ourselves trading all the way down to this discounted weekly one, right? But I do not like getting too excited about selling when we are at high time frame expansions, right? Like, I mean, look at this. We are clearly bullish. Any fall off could be a manipulation for us to continue rotating back higher. So I'm not going to be the one pointing sell side targets. I would rather just look for the lowest hanging fruit and be content with enough. All right, so let's finish up with Nasdaq. Then I think we can cover the metals and round it up. So On NQ, we basically have the same situation going on. I don't have to keep covering everything because we don't have anything interesting. If we had something especially interesting, then I was gonna point it out. But yeah, right now we go even all the way to the monthly time frame. The only thing I can see here is this discounted monthly fair value gap, right? Which is, yeah, we still have like 23 days for this candle to close, so there's a high chance we could drop down to it, right? Let's just keep it on our charts and maybe even label it as our monthly BC, right? That's our buy side imbalance, sell side inefficiency. So we could see price trading all the way down to it. For me, my only level of interest, it's not really an area, it's literally just a level, is this area this level that I drew out on my chart, which is 29,300. My only reason is because I'm hoping to find this to become a swing low, or for us to have a swing low around these areas. Then it was going to make this fair value gap on the hourly time frame to be an area of importance where we could reject lower from. As you can see, this second arrow that I drew that we could retrace back into it, go lower, then back to the all-time high, right? Or as I just mentioned now, we could reject from it and drop all the way down to the monthly BC as our high time frame gaps, right? So yeah, it's just about ranges. I tried to measure Friday's range and all I could get was from there to there. This is assuming this is what we have now. If we do drop all the way here, then you see how the 29,300 psychological level is almost aligning with the 50% area that I'm looking for a reaction. So yeah, nothing really too interesting. It's just a level that I thought would be interesting to watch going into next week, and it's all based on the 1 hour time frame. Don't really have anything else interesting to cover there, but yeah, slightly lower prices could be our targets going into next week, especially considering what I just mentioned on YM. Then with gold, I've been singing this song for so long, but I'm looking for a new low of year. I had this line on my chart that says eyes here for so long, but I haven't been able to get a good entry. I thought last week we were going to be able to retrace up into this bearish fair value gap, the daily one that you see right here, but I wanted the upper portion of it, basically where this blue line is, right? I was gonna have a setup that looked something like this, stop loss somewhere there above the purple area, then I was gonna target all the way down there at 3,888, right? I was gonna target this was gonna be my setup, my swing setup, but of course never really gave it, and yeah, that kind of sucked. We only got a test of this rejection block right here. I'm just gonna delete this so it's easier for you guys to see. And if you pay very close attention, right there, the very next candle after the rejection block was formed, the third one right there is the one that actually tapped into it right there. I can even, if I made this a little bit bolder, you wouldn't be able to see it too clearly, but yeah, basically you get the idea. We tapped into the rejection block, we didn't waste much time after that, and we just started falling off in the very next candle. So what am I looking for going into next week? More bearishness. I'm looking for this sell side liquidity to be taken, and I'm also looking for where I highlighted earlier. So we could find a possible creation and retracement into a daily CB, a daily sell side imbalance forming somewhere here, fair value gap that we could retrace and then continue lower. Am I going to be able to find a swing position? Probably, but will I take the trade? Probably not. I'm probably going to trade it intraday and intra-week. I'm probably just gonna take it by the day, trading futures prop firm accounts. So yeah, nothing too interesting. The same goes with silver. I just don't have anything too clear because my only target since the year began was somewhere here, right? It was just this low, so we got taken in March and I became neutral from there. I didn't have anything else to add, nothing to edit, so I'll basically be watching gold to see when to stop selling silver, basically. Okay, lastly, for Bitcoin, for crypto, so I'm looking for higher prices. I'm bullish overall on crypto. I'm looking for all-time highs to be tagged on Bitcoin, but I have certain conditions for that to be the case, right? Firstly, we could see ourselves going a little bit lower. My area of interest is this rejection block right here. I know I don't really do rejection blocks on crypto, but this is my general area of interest that we could trade into on the monthly time frame before we can start rotating higher. I'm not saying that we're going to take this low. I'm not saying that it's impossible to take the low either. So I'm looking for us to fall into this area. Then I'll look for a daily shift, a daily shift in direction in order to start buying it properly all the way to the all-time high. I'm gonna find an account to fund for that swing idea, but as always, I'm most likely going to take trades day to day. So right now though, we could see ourselves pulling back a little bit into the range after the fall off we got on Friday. We could get something like so. Just a quick 2-hour trade based off of the 4-hourly time frame, and I think the rejection might be quick if we do get this pump up, right? If we do get it on the hourly time frame, it's just to these highs right here, but nothing overall. I don't want to be too in depth with crypto, but that's what I'm looking for, because right now we haven't gotten the cleanest setup and we haven't gotten the cleanest condition for me to start pointing out ideas. But yeah, just keep it in mind that I'm looking for bullishness on the crypto market, but I would like to see us tap like 50k for example before we can start looking for buys on Bitcoin. Of course, mimic the same thing across the board on every other crypto that you might be trading or interested in. If you have anyone that specifically you would like me to watch for, then I would, and I'll make a video about it, or I'll just give a reply in the comment section below. And speaking of comment section, please feel free to let me know whatever you have in mind. Share with me what you would like to cover. Let me know what you would like me to change in these videos. If you have any suggestions, if you have any opinions, if you have any interest, just let me know in the comment section below. And trust me, I read every comment. I'm not that big of a channel, and even if I reached 100,000 subscribers, I'm still going to go through every single comment and actually pay attention to each one of them to respond. Or if it's a spam bot, I'm just gonna delete it to clean up the channel. But yeah, for now, stay safe, look after yourselves. Your mental flow, your mental state is top priority. Try this week. I'm going to leave you guys with a set of words if I am able to, but try to preserve your capital. That's one thing I can say. Preserve your capital, focus on your capital preservation, and prioritize that. The second thing I can say is to focus on yourself. Trust yourself, trust your concepts, trust your ideas, trust your risk reward ratio, trust your system, trust whatever you're trading, and never try to mimic and become like me or anybody else. Just do you and do the best you possible. Then lastly, have the confidence to execute what you're executing, even if it ends up being losses and losses and losses. You trust in the system, and that ultimately is going to become what becomes profitable for you in the long run. So yeah, anyway, for now, look after yourselves, look after those around you, show care to those that you love, and stay safe. Good luck, and as always, good trading.